Ladies and gentlemen, welcome back to the channel. We have a lot of news and events to cover here in this video, including a new testimony from Fed Jerome Powell. What does he say about reducing interest rates, the economy, and more? We also have FedEx earnings today and after hours, which is going to be very important. Some headlines coming out from the Middle East and some trade headlines. Yeah, we're back to trade deal talks. Ladies and gentlemen, here in this video, we'll get into all of this, but I think first and foremost, I should start by saying stocks are almost at a new all-time high. And it looks, to me, almost with a certainty, we are about to hit a new all-time high in markets. Now, what happens after a new all-time high is you tend to see new all-time highs. You tend to see Wall Street, even the most bearish investors that say, F it, I don't care, we have to buy stocks again. It tends to lead to a bit of a chase, because when you go through a crash or correction, you normally fail and see a reversal lower if this was really just a bear market rally before you hit a new all-time high. Once you hit a new all-time high, you can no longer say it's a bear market rally. You can no longer say that this is like a false rally. That's when the chase really starts, and you are about 0.5% away from a new all-time high. So I have a feeling this week we could very well hit a new all-time high in markets and start the chasing process. I will also mention yesterday the S&P was up 1%. Today you're up over 1% at the time of recording this video, and you gapped up today. Typically a gap up right below new all-time high, right below an all-time high, tends to lead to new all-time highs. Ladies and gentlemen, hit that like button and subscribe to the channel. We have a lot of work to do here in this video. If you guys want to come trade with us as well, every time I make trades, check out that link down below in the description of this video. You probably already have heard this before, but we are sifting through small caps, smaller, less known companies to find the ones that are your 10 to 100x opportunities. 98% of them are complete garbage, but some of them I think are big winners. One of which went up over 30% today. The other picks we've had recently were up anywhere from 5 to 10% today. I think there's a lot of value in some of these names that are so small they get overlooked. They don't have retail investor bases. They don't have many analysts that cover them until they blow up, and then everyone knows about them. That is the value that I provide. I spend hours every day sifting through small caps, because the more you can sift through, the higher the likelihoods are that you actually find the big winners. That's what I pride myself in doing and bringing to you guys in the trading community. Check that link out if you have not done so already. We also trade earnings. We trade different trades like oil. We bought oil puts yesterday that I sold out at 100%. Those suckers are now like 500%ers. So if you guys want access to that, check out that link down below in the description of this video. If you have problems joining the group, just message me on Patreon. It's very easy. I'll get back to you as soon as possible. Nonetheless, let's get started. First and foremost, today and after hours, you have earnings from FedEx. FedEx has long been seen as a bellwether for the economy. FedEx is seen as the company that, can give you a little bit of a heads up on what's coming next and how the economy is doing, right? Because they do a lot of business to business. It's called B2B shipping, right? So FedEx is going to be very important today and after hours, especially again in regards to tariffs. How is FedEx managing that situation? Later on throughout this week, tomorrow you have Paychex and General Mills tomorrow morning. Wednesday and after hours you have Micron and Jeffries. Thursday pre-market you have McCormick, you have Walgreens, Boots Alliance, and then in after hours on Thursday you have Nike, which Nike is the other important earnings. How are they managing tariffs? How is their demand doing? Despite them actually having to raise prices a couple of weeks ago. If Nike can manage to get through some of the tariff pressures, then I think Wall Street's going to say any other company can get through the tariff pressures as well. Fed Powell says the dollar is going to be the reserve currency for a long time. He says that credit conditions for small business are a little bit tight. Fed Powell says we have some shrinking left to do on the balance sheet. We think we can go for a good while at this speed. Jerome Powell says we are getting closer to price stability, but we are not quite there yet. Fed Powell says, I don't think MBS runoff has a large impact on housing costs. And Pulte on X, he is the U.S. Director of Federal Housing, says housing is the central theme of Powell's hearing today. Interesting. Jerome Powell says the reason we are not cutting rates is that forecasts in and out of the Fed expect a meaningful increase in inflation this year. Again, the Fed has moved away from data dependent to opinions. Okay? They're making a bet on opinions. That's why the Fed, as I call them, are now incompetent and or compromised for one reason or another. They're literally making judgments on opinions. That's sad. Jerome Powell says the Fed would look at the overall situation if oil prices surge, which is good news that oil is down another 5% today. Shout out to you guys in the trading group that traded the oil trade with us yesterday. Those contracts are now $250 in the money a piece. We bought them at $64. So yeah, that was a big trade. If you guys want to join that, link down below in the description of this video. What we specialize over there, the real value that I think I like to bring is the sheer amount of due diligence I do on small companies to sift through and filter through the bad ones and find the good ones. Okay, it takes a lot of time. There's a lot of criteria to meet, specifically total addressable markets, what sectors they are in. I really like AI and gene editing. I think specifically like gene editing got big in 2021. All of those stocks went to, hundreds of dollars a piece. Most of them were above $100 a piece compared to where they are today, like $5 or $10. It's kind of like solar as well back in 2021. Like solar will have its moment again where those companies were just too new in 2021. Like their drugs were just, a lot of them didn't even have drugs in trials or anything. And now they're getting to the point where they're getting like FDA approvals or getting close to which. And now Wall Street just doesn't have them on their radar anymore. A lot of them are less than $1 billion market cap, so nobody's paying attention. And like they're doing big things. They're about to do huge things. A couple of those specifically I really like right now, and a couple smaller AI names, one of which is up 30+% today that we bought like a week ago. Okay, that's an AI name specifically. A lot of due diligence on these small caps, guys, that are huge. Like if you want a stock that's going to go up 10 to 100x, it's probably going to be mentioned in the group first. Okay? So check it out, link down below in the description of this video if you guys want to come join us. Now there was also some comments on trade deals. Hassett says that trade deals are coming after the tax bill passes, according to Politico. Jerome Powell says the economy is slowing this year. Immigration is one reason. Jerome Powell, when asked why they are not cutting rates, he says it's uncertainty about the size and potential persistence of inflation from tariffs. Again, opinions. There has been zero evidence of inflation from tariffs. In fact, I think tariffs are very disinflationary. Believe that or not. Because inflation is purely a byproduct of printing money, as Milton Friedman said, the late economist. Inflation is always a monetary phenomena, okay? It's never a fiscal phenomena, which I kind of disagree with that, because if the government spends too much money, then obviously that can cause inflation in certain sectors. But it's always a consequence of money printing. That's the bottom line. If you give away money and print money, then you're going to see inflation. If you don't, then you're not going to see inflation, especially with tariffs that are actually a tax. How does a tax lead to inflation? The Fed has no idea what they're doing right now. Jerome Powell says the Fed is just trying to be careful and cautious with inflation. And Fed Hammock today is showing you that he is also incompetent. He says, quote, I am towards the top end of the Fed dot plot. Fed Powell says if it turns out inflation pressures are contained, we will get to a place where we cut rates. Jerome Powell says we don't need to be in any rush, which again is incompetent, I believe, on the Fed's part, but it's a good sign that the economy is holding up, that things are not deteriorating at a rapid pace. That's the positive you could take away from this. Fed Powell says, I'm perfectly open to the idea that tariff inflation pass-through will be less than we think. Fed Powell says, we will be learning as we go through the summer. Fed Powell says, I think we'll see tariff inflation in June and July numbers. So kind of what he's saying there is he's not advocating for a July cut because that's when we need to see if inflation starts to come in. Also in the news today, the EU readies retaliatory tariffs to secure a better trade deal with Trump. They're trying to take the Trump playbook from Trump. Germany's chancellor backs more muscular approach ahead of July talks deadline. So again, is in favor of, threatening or putting on tariffs on the U.S. U.S. House Speaker Johnson says that we are on target to pass the tax bill by July 4th, which is coming right around the corner. Fed Powell says it's too soon to say anything on supply chains, but we're watching that. And then kind of contrary to everything Powell has, said during this testimony to the Senate today, Powell says, quote, I wouldn't say I'm concerned about the quality of data today, but the direction is concerning. So like, what is it, dude? Is the economy fine? Is it getting worse? You're concerned about the economy getting worse, but you're not concerned about inflation? I mean, like, Powell needs to go. Jerome Powell says that rental inflation is now coming down quite regularly. Fed Hammock says a shift in immigration could affect how we interpret jobs data. He says the labor market seems stable. Immigration restrictions could be a barrier to growth in the medium term. Fed Powell says the significant majority of policymakers feel it will be appropriate to reduce rates later this year. So let's get this straight. We have no inflation right now. We have a PCE report coming out, I believe tomorrow. We'll double check that, but I believe tomorrow, if not Thursday. And you're not comfortable cutting rates now, but you're expecting inflation in the coming months, and that's going to make you more comfortable cutting rates? Either the Fed cuts now, or they're not going to cut at all this year. Because if they do start to see tariff inflation in July or August, they're not going to cut rates later this year. They're going to say, oh, well, tariff inflation's here. And then if we don't get tariff inflation, they're going to be looked at as fools because they thought we were going to get tariff inflation and it never showed up. Like, you just need to cut now. And this is just, again, how incompetent the Fed is. Fed Hammock says progress on inflation has been very slow, yet over the last 7 months, if you were to exclude January and February, or average those out, you're looking at like no inflation in the past 7 months. Like 2% inflation. We're already down to target, guys. I mean, someone needs to tell them that. Iran's president says Iran is prepared to talk and defend the rights of the Iranian people at the negotiating table. Iranian president says Iran will not violate the ceasefire unless Israel does that. Fed Powell says also a weakening labor market would suggest cutting sooner. And Jerome Powell says the U.S. is not in a recession. Trump wrote on Truth Social, quote, get the big, beautiful bill to my desk ASAP. Get the budget deal done this week. CB consumer confidence today came in at 93. The forecast was 99.8 and the previous month was 98.0. So weaker economic data this morning. On Kalshi, there is a betting market here that says, when will the Senate pass a reconciliation bill? Before July 2nd, 2025 has surged to 63%, before August 2nd is at 91%, and before September 2nd is at 95%. So, you know, there's a good chance we could see this bill passed in the next 2 weeks or so. And then we could forget about it. We can move past it. White House senior advisor Hassett says, we will see a sequence of trade deals around the 4th of July. The administration has been focused on getting the one big beautiful bill passed through Congress. China's foreign minister says that China is in contact with Iran, Israel, and hopes to see a real ceasefire. Trump on Truth Social says China can now continue to purchase oil from Iran. Hopefully they will be purchasing plenty from the US also. It was my great honor to make this happen. He wrote that on Truth Social. China never stopped buying oil from Iran. I mean, China probably laughs when they see this, because what Trump says, unfortunately, has nothing to do with what China does. So tomorrow, all we have for data, if you will, is Fed Jerome Powell, his second day of testimony on the Senate. We're not going to hear anything new. Okay, if we were going to hear anything new, it was going to be today. But we do have new home sales for May and new home sales month over month, a bunch of oil data, 2-year bond auction, and a 5-year bond auction. But that's pretty much it. On Thursday, you get durable goods orders month over month and the GDP growth rate. And then on Friday, you get core PCE. You're not expecting any inflation. You're expecting, again, another 0.1% reading, which would be 3 months in a row. If you exclude February and January, 1, 2, 3, 4 months here, you're running at 0.1%, 0.13% roughly, core PCE. Like, I mean, that's looking at 1.5% PCE, you know, over the, well, let's do that the right way. Yeah, 1.56% core PCE over the last 12 months. Again, excluding January and February, you always see a rise in inflation during those months every year. So we don't have an inflation problem. And Friday's data is just going to confirm that even more. Now, the most recent AI investor sentiment survey that came out on June 18th, last Thursday, showed bullish investors at 33.2%, neutral investors at 25.4%, and bearish investors at 41.4%. Bearish investors still dominate. There is still a wall of worry to climb in markets, whether it's the tax bill, the incompetent Fed, or whether the ceasefire in the Middle East holds up. There's a lot that Wall Street is worried about right now, which means that stocks can continue to go higher. There's an old saying on Wall Street that you need issues for stocks to move higher. You need to climb a wall of worry. Without a wall of worry, there's nothing to get over. There's nothing to have good news on. You know, so stocks need a wall of worry, and that's what we have right now. And that's a big reason why I think we're about to hit new all-time highs this week. The CNN Fear and Greed Index coming in at 57, market momentum at fear, stock price strength and greed, stock price breadth, extreme greed, put and call options, fear, market volatilities, neutral, safe haven demand and greed, junk bond demand is sitting at neutral. The percent of stocks trading above their 50-day moving average coming in today at 69.75%. Again, on the high side, but this really just shows you that markets have seen a bit of a breath thrust from the lows. Okay, this just means 70% of stocks are trading above their 50-day moving average. That's a relatively short-term moving average. Nonetheless, a good sign, but it is on the high side. Now, the cool part is, once we hit new all-time highs, that's when the chase really starts. Because when you hit a new all-time high, you tend to hit multiple new all-time highs. It doesn't tend to be a one-and-done kind of thing. It tends to be one all-time high that leads to a couple more all-time highs. Usually you get a consolidation afterwards, and then you hit more new all-time highs. Well, if a rally from a correction low is going to fail, it typically fails before you hit a new all-time high. Typically, you don't hit a new all-time high and then fail. So again, when you hit that new all-time high, which is about 0.5% away from where we are right now, it's going to lead to a larger rally, probably to a bit of a short squeeze, and I think a bit of AI euphoria. I think AI is really going to come back into the spotlight here. Now, what you can also see is today was a bit of a gap up. Yesterday, you had almost a 1% positive day on the markets. Today, you have a 1% positive day on the markets, but you gapped up. Typically, when you gap up right below a new all-time high, it's just a matter of when do you hit that new all-time high. Like, it could be tomorrow that we hit a new all-time high. Again, depends what happens, but we're really close to a new all-time high as it is. And right now, it's not the time I think you want to be shorting markets, betting against markets here. Now, if you want to wait until we hit a new all-time high to go long and maybe some options or something, a leverage strategy, that's probably a good idea because there is a chance that we still do fail here. But the odds are much better that we're going to hit a new all-time high very soon, and likely a chase that starts from there. So again, let me know your thoughts on all of this down below in the comment section. As I've said before, I think the SPY could be at 700 by the end of this year. I think now that we've cleared this whole Middle East conflict, we're not going to go back to fixating on trade deals. You know, we're not going to go back to worrying about the tax bill. We've fully digested those things plus some. I think the focus from now into year end is going to be on an economy that's better than expected, that inflation that does not show up, a Fed that begins the process of reducing rates, and I think Wall Street over the next coming months is going to realize, hey, we're going to get a lot of rate cuts next year. I think you're going to see a new wave of AI euphoria and general euphoria in markets, not bubble-like euphoria, but justifiable euphoria. I think earnings estimates will continue to rise that will fundamentally justify where markets go to. And also with interest rates falling, that means the multiple doesn't look as bad, right? Because really valuation is based on other metrics of valuation. Yeah, this market might look expensive if you can get 4.5% on a 10-year treasury, but it may not look as expensive if you get 2.5% on a 10-year treasury. Then it makes a lot more sense to invest in more risk on assets like stocks. So with that said, hit that like button and subscribe to the channel if you have not done so already. Check out the trading community link down below in the description of this video if you have not done so already. Have a great rest of your day, and I will see you in the next one.